Right, let's talk about something that the financial world has been telling you for decades. Diversify. Don't put all your eggs in one basket. Spread your risk. Mix up your assets, stocks, bonds, property, cash, a little bit of everything. It's the single most repeated piece of financial advice in history. And honestly, it's good advice. But here's what nobody in the financial world is saying out loud yet, and they absolutely should be. Diversifying your banking options is just as important as diversifying your investments. And I'm going to make the case today that having a crypto wallet isn't some fringe tech bro get rich quick thing. It's just common sense financial planning, full stop.
Now, when people talk about crypto,
And financial intelligence, they usually talk about the unbanked, the roughly 1.4 billion adults worldwide who have no bank account at all, no access, locked out of the traditional system entirely. And yes, that matters. A crypto wallet can be a bank account for someone who has never been able to get one. That is genuinely transformative. And I want to talk about two other groups that don't nearly get as much attention. The first is the debanked. These are the people who had bank accounts and lost them. Their accounts were closed, suspended, or restricted, often with very little explanation and even less secrets. This has happened to journalists, political activists, crypto businesses, and perfectly ordinary people who happen to trade about some algorithm somewhere. In the UK, there were well-documented cases of banks closing accounts belonging to political figures and organisations, accounts that had been held for years, simply because the bank decided those clients no longer fit their risk appetite. No crime committed, no warning, just gone.
and then there's a group I'm calling the restricted banked. This is the one that I suspect a lot of people watching this will actually relate to. You have a bank account, it works, mostly. But increasingly you're being asked questions. Why you're depositing cash? Where did this transfer come from? What's the purpose of this payment? Can you provide documentation for this withdrawal? You're not a criminal, you're just living your life. But the bank is treating you like a suspect. Or maybe you run a small business and you can't pay a supplier in cash anymore without generating paperwork.
Or you've had a transaction flat and held for days with no explanation. Sound familiar? This is happening everywhere, and it's going to get more pronounced as banks tighten their compliance frameworks and automated monitoring becomes more aggressive. So here's the thing. If I told you to put every single penny you own into one stock, one company, one sector, nothing else, you'd think I'd lost my mind. That's not investing, that's gambling.
So why are we perfectly comfortable putting 100% of our financial life into one institution,
One currency governed by one set of rules that we had no say in and could change at any time? Diversifying your banking options isn't radical. It's just the same logic applied into a different context. And a crypto wallet, a self-custodied crypto wallet especially, gives you something no bank account can. An account that no bank, no government, no compliance department can acquire or freeze without your private key. It's yours, filling and completing yours. Why not saying ditch your bank account? Keep your bank account, pay your bills, run your payroll, do all the things you normally do. But also having a wallet, even one with a modest amount in it, is smart edging. It's diversification in the most literal sense. Right, so this is where usually people switch off because crypto wallet sounds complicated and scary and technical. It isn't. Bullshit. Let me walk you through options, and I'll start with the easiest. Option 1,
Coinbase. If you want an excellent low friction entry point,
Coinbase is it. Download the app, create an account, verify your identity. Takes about 5 minutes. You've got a wallet. You can buy crypto directly through it. You can receive payments. You can send. It's about as complicated as setting up a PayPal account. Genuinely. The trade-off is that Coinbase is a custodial wallet. They hold the keys on your behalf. That's fine for most people starting out, as I keep your money at the bank. Convenient and perfectly sensible. Option 2 is MetaMask. This is a wallet of choice for anyone who wants to go a step further and take actual custody of their own assets. MetaMask is a browser extension. You're ready to Chrome or Firefox. Follow the setup and write down your seed phase somewhere safe. That's it. Your seed phase is the master key to everything. Don't lose it, don't share it, and don't photograph it. But beyond that, using MetaMask day to day is simple. Tick, confirm, done. It connects directly to platforms built on blockchain, including Content Link. It runs on Coinbase's base network. Option 3 is Rabby. Rabby is a newer wallet that a lot of people in Web3 are switching to because it has some smart built-in security features. It previews what a transaction is going to do before you confirm it. It is a really useful safety net for beginners. Same general principles as MetaMask,
Slightly smarter interface.
Option 4, a cold wallet.
If you get to the point where you're holding a meaningful value in crypto, and I hope you do, then a hardware wallet like a ledger is worth the investment. It's a physical device about the size of a USB stick that stores your private keys completely offline. Nothing can touch it remotely.
Think of it as a safety deposit box that fits in your pocket. The entry cost is around $100 to $120, and it's a one-time purchase. Now, why am I telling you all this? Because
Here's the practical reality. There are platforms and opportunities being built right now in Web3
that are genuinely exciting for creators. And the only thing standing between most creators
and those opportunities is not tech skill, not experience, not a large following.
It's simply not having a wallet.
Content Link is a good example. It's a platform I'm building, and yes, I'm the founder, and I'm fully transparent about that, where creators earn 55 to 75% of platform revenue. No follower minimums. You earn from your first post. The revenue share is verified on-chain, which means it's not a promise in a terms of service that could be quietly changed. It's written into the mechanics of the platform itself.
The Content Link pays in Havana tokens or USDC or USDT, which is digital dollars, which means you need a wallet
to receive those earnings.
What's your reaction?
Crypto, not for me. I understand it. I genuinely do. The space has had its share of nonsense and bad actors.
But go back to what we talked about at the start. You diversify your investments because concentration is risky.
The same logic says don't be entirely dependent on platforms that take 95% of the revenue you generate. Don't be entirely dependent on a banking relationship that could be terminated without explanation. And don't lock yourself out entirely of a new category of earnings opportunity because the onboarding sounds technical. Setting up a Coinbase account takes 5 minutes. A MetaMask account takes 10. And once you've done it, every door that requires a wallet is now open to you. That's the only barrier, and it's a pretty low one.
So to wrap this up, the investment industry has been telling you to diversify for decades, and they're right. I'm just extending that advice
into territory they haven't caught up to yet. Diversify your banking options, have a wallet. It's common sense playing, but protects you against increasingly restricted traditional banking environment, and it opens you up to a whole new world of opportunities.
The link to content is in the description. Come and have a look. If you've got any questions about wallets, about the platform, about any of it,
drop them in the comments. I read them all. I'm David Sime. I'll see you in the next one.